Hello, good afternoon. My name is CryptoKeep. Welcome to this supply and demand continuation lesson. So, in recent times, we have discussed how to identify areas of supply and demand using the rally base drop and the drop base drop, like that. We have also identified how to enhance our zones to be able to differentiate between a strong zone and a weak zone. And we have discussed the first filter, which is the basic candles. Discuss the essence of having little basic candles than multiple basic candles. Also, in the very last video, discussed the essence of strong moves away from the zone, which can either make it a good zone or a bad zone. And by good zone, I mean a strong zone, and by bad zone, I mean a weak zone. So today, I want to talk more about identifying strong zones and what constitutes a fast move away or what constitutes a strong move away. And by that, I received a question from a viewer, and this question goes just, I will start with the question. So he said, how does one know the move is fast? Some book says 3 candles making higher highs and higher close. Some say large candles. Now, how large is large? Some say at least 2 ECN candles. That is, candles that the bodies are not 50% of their range. Some authors said it can be 1 ECN candle. But once the move breaks supply, it is considered strong. I tried to use wide range bars, that is, candle body larger than the previous 4 bars or 7 bars, using the concept of narrow range bars, NR4 or NR7. He said he's been getting analysis paralysis, and sometimes they work, sometimes they doesn't. So how can we attach rules to defining strong moves to be consistent in our selection every time? So that is the question, as you can see. So firstly, I will say there is no guarantee that any zone will hold. So in as much as there is no guarantee that any zone will hold, it's all probabilities. Either you have a strong zone or you have a weak zone. A strong zone looking very perfect to you can be very wrong in the eyes of the market. The market can break it like a piece of cake. Whereas a poorly looking zone can be the one that will give you the best reward. So there is no exact guarantee that any zone will work. It's all probabilities. And the probability here is that we probably have institutional buyers waiting at that particular area due to a previous orders they have placed that are not completely filled. Assuming you have a demand at this point, and looking at this move, you can say it's strong. When you look at one of your questions where you say, well, what as a big candle bodies, let me see where that question is again. Some say at least 20, okay. Some say large candles, right? So here now, this particular candle, we have a large candle. And if you are taking large candle into consideration, this might qualify as a demand zone. But then, does it guarantee that it will work? No. This can just be a pump and dump scheme. It might be a fake rally. So it doesn't guarantee that it will work, even though, as you can see, it did work, yes. But then it worked probably because buyers who bought at this point are still available to buy. So that is the reason why it worked, and not because it is a demand zone. Demand zone can fail, supply zone can fail, support or resistance can fail. So the idea is people who are buying at this point, assuming the banks or the institution now, they are not completely bought in. So when price comes back to it, they want to protect their best investment and then buy again to make price go further back up. So that is the idea. So whatever filter you have to consider this zone a strong zone is solely dependent on you. You can say you want to have five bullish candles in a row. That is to ascertain that you have a strong move. If it's just one big candle like this, it is solely dependent on you. But from what your screen time will show you is what you will realize and how you will self-tune yourself to identify strong and weak zones. So from the books you have read, that is what their screen time have taught them. Those who are waiting for higher highs, higher closes, that is what they have seen on their chart, and that is what their chart is telling them. Those who are waiting for large candles, that is what their chart is telling them from their experiences. Though some even use this bullish engulf, the moment they see a bullish engulf, the market long on close. Or some wait for it to retrace to the last bearish candle before the engulfing candle, and they take a trade. And looking at this particular chart, this is an engulfing candle. Some will market long and close here, which may be a bit too late, while some will wait for this particular point to enter. Bullish engulfing candles are reversal patterns. They can also be used in supply and demand trading, but that doesn't mean that every bullish engulf candle constitutes a demand zone. Now let me get into full explanation on your question, because this is what I want to even talk about today. So this is what you are saying, right? Let me do this. Let me do this. Okay, like this. All right, so this is what you are saying. Assuming you have a base like this, you have a base, a candle base. Assuming this is a base, then you have a rally. So you have a rally. From your question, you said some says 3 candles making higher highs, higher closes. So assuming you have this candle, which is an engulf, it may not necessarily be an engulf. Then you have another candle. Then you have another candle here. So when you say making higher highs, we have highs like this. This made an higher high, definitely. And this has made an higher high. Let me put a little bit of wick to the bottom. So this is your 3 range candles where you have candles making higher highs. Breaking of this means they are making higher highs. And higher closes. They are all closing above the previous candle's highs. As you can see, the close here is above this side. The close here is above this side. So this is an example of higher highs, higher close. Now there is another example of higher high, higher close. So I will do the 2 to be sure in case this is not the one you mean. So we might have a candle like this. Then we have another candle like this. And we have another candle like this. We all have the highs and lows. We can have this like this like this, and this like this. We might have wicks to the bottom, we might not have wick to the bottom. So these are 2 examples of making higher highs, higher close, according to you. Let's assume we have a base, which can be an engulfing candle or not. It doesn't matter. So these are the 2 types of making higher highs and higher close. On this particular one, this is a stronger one than this. Reason being that the close of these candles is closing way higher than the close of the previous candle at this point, and closing above the highs. As you can see here, this candle is also closing above the highs and closing above the close. So here we have higher highs, as you can see, and we have higher closes, which means the close is higher than the previous candle's highs. Now, on this particular one here, we have higher highs, right? As you can see, this is an higher high, another higher high. Now, we also have higher close, because when you say higher close, the close of this candle is at this point, which means this candle closes just above the close of the previous candle, but not quite above the highs of the last candle, which means we still have an higher close, but it didn't quite close above the highs. So I can't be exactly sure which of these two scenarios you are referring to. And this close is just closing right on the edge of these highs. But then looking at closes, you see have an higher close to the previous 2 candles closes. But either ways, if this is what you want to see to determine that at this point you have a demand zone, you can't be wrong. You can't be wrong. So before I go into details, let me take the other one you have stated as well. Then you made mention of another that you may have, some say large candles. So I will use this type of 1-2 example here. So where you have a bearish candle, and then either you have highs or lows. You may have, you may not have, that is not important at the moment. Then you have a big candle like this. Assuming you have a big candle, this is a large candle. Then you have how large. So that is where I will draw another one like this. And then the previous one will be like this. Either you have wicks or not, doesn't quite matter. That's at this point. Then you made mention of another one where you said ECN candles, which means candles with their bodies lesser than 50% of their range, if that is exactly what you mean. That means at least, you said some want 2 ECN candle, but some said 1. So before I go into that, let me quickly take this. So what is the common thing between all these four scenarios? There is something in common. There is a difference, and there is something in common, something similar to all the 4. Here, you have bulls taking control of the market. And they are taking control of the market in a continuous form. Likewise here, even though they are not yet closing above the highs of the previous candle, but they are still taking control of the market. What is this bullish engulfing candle or large candle, as you have put it, signifying? It's also signifying that bulls are taking control of the market. Now, how large is another question. This is a very large candle, no doubt. This is also a large candle, no doubt. Why do you think this is a large candle? Definitely, when you look at this particular candle or this particular setup to this particular setup here, definitely this is larger than this, no doubt. But then, how large? This is also a large candle. Here you are looking at it that it is small in size to this, but then it is large. This is the thing you want to see to know that it is large or it is not large. Now here, you have your open, you have your close, you have your weak high, you have your weak low. Here, if you either have a weak low or not, you want to look at the total size of the candle itself. Is the total size of the candle bullish? Yes. Is the candle size or the candle body in this instance, what is the size when you compare it to the to the entire candle body? Now, if you have something like this, do you still have a strong pull away or a large candle? Don't forget, candle is not just the candle body size. Candle is the entire from the low to the highs. So if you have a weak low here, that means this range to this range, I'm not good in all these drawing things. So this is your entire candle from this low to this highs. It's not just from this open to this close. That is the body size, but this is the entire candle. So when you want to see a big or large candle, you are considering not just the body size, but the wicks. So when you look at this structure like this bullish engulfing candle, how good is this bullish engulfing candle? Some can argue that this is an hammer, or what is it called? Is it shooting star or the other one of hammer? Pin bar, you know, the bearish type. So people can argue that this is a bearish, or is it shooting star they call it? Because when you consider the wick is almost times 2, double of the body size. So is this still a strong move? Definitely not. It's not a strong move. But when you remove the wicks, or you have something like this, Is this still a strong move? Definitely it is a strong move. So that is how you identify large candles. And that is why some people say you want candle sizes, like in the book you sent to us. I was going through it and I saw where the guy said expanded range candles. And he said those are the candle whereby they close above 50% of their range. Looking at this now, this should be 50% of, no, sorry, this should be like 50% of this candle range. So for this candle to close above the 50% of its range means it is a strong candle and it has a very little wick. So you want to take that candle as a light candle. And like I said, if you have it just 50-50, this is a candle range, the body, and you have like the same size here, you know, that is not exactly a strong candle. It is a decent candle, making 50% close off its range, but then it is not entirely a strong candle, because some will also tell you it's still a pin bar. And what do you, when you have a pin bar like this, it can signal reversal coming from this point. It becomes what they call, I've forgotten the name, but it doesn't matter for now. So it can cause reversal. Likewise, it can push price down as well. So in supply and demand, what are you trying to see? You want to see demand coming into the market, overwhelming the BS, overwhelming supply. And you want to see points of huge demand coming into the market, not points of having a sort of 50-50 agreement with the BS. You want the bulls to overpower the BS massively. So what you are looking for is a strong closed candle that will constitute a strong or a large candle. It's not compulsory. It is as big as this one. It can just be as big as this, but then you want it to be a very strong bullish candle. And if you look at these two candles here, see the open of this candle, see the wick low, and you can see that there is no wick to the top of that particular candle. So that is a marabozu, or whatever they call it in price action, but it's a very strong bullish candle. And then as for me, I want to see the follow through candle, which is the next candle, this particular candle. So whatever this particular candle does, either it is bearish or not, it's none of my concern. In as much as I have a good decent move away on this particular candle, it can be as large as this, it can be as large as just this level too as well. It can even be as large as this candle. That is where that is what you want to see to ascertain large candles. It doesn't not necessarily mean it has to be extremely big in size. You want to see how it opens, how it closes, how does it treat the BS. Is it trying to give BS some chance to negotiate and they come to a sort of 50-50% agreement, or is it just overwhelming the BS without giving them any chance to talk? It's like in football when you say Barcelona is playing West Ham or Barcelona is playing Aston Villa. What will you expect? You expect Barcelona to score them like 10-0, 5-0. You just expect Barcelona to dominate the game, because Barcelona is obviously the stronger team to either West Ham or Aston Villa. But if the match starts, first half 0-0, second half 80 minutes 1-1 or 0-0, or Barcelona is winning by 1-0, how will you feel? You will feel disappointed that Barcelona is not playing the way you expect them to. It is the same thing here. When you have a candle either big as this, but then the wick is just as big as something, that means they are negotiating with the BS, and that is not what you want to see. So demand can form, like I said in the first class, due to either genuine demand coming into the market or lack of liquidity on the sell side at this point, or due to an event which can be economical event, or due to some tweets, because now Twitter seems to be doing a lot of shit. Sorry for language, but then demand can come into the market due to any factor. But you want to see genuine demand coming into the market. So are those demand genuine? How the candle closes, and what they do in that particular time is how you will know. Now we have different type of bullish engulfs, but to quickly answer your questions before I get into those, so let me go on to your next question. Let me cancel this first. I believe I have answered at least this to show you that this is a continuous move, and the thing they all have in common is that the bulls are in control, and that is what you want to see. Okay, before then you made mention of 2 ECN candle, which means less than 50% of their range, and one taking out supply. I have something like that in an image here. So let me quickly get the image here. I have something like this. I did something like this, was it not some years ago, when I was explaining something to somebody. So now, if this is definitely less than 50% is range, right? That means if, and this is a base, right? You can take this as a base, you can take this as a base. So assuming we have this particular candles, all of these are lesser than 50% of their range, like this. Assuming you have this week to the upside like that, and this week to the upside like that. That makes this entire move that this candle are either 50% of their total range or less. But clearly you can see that this particular one is clearly lesser than the range. So if this is what you mean by candles making less ECN, if your ECN means lesser than 50% range, and then there is a supply zone here, right? Because it pushed price to the downside. Forget market structure for now, telling you that the price is going higher. So let's just assume we have a supply here. Also, we have the resistance at this point. But then you have this type of candles. Then you are looking at this area as your probable demand zone. But then the moves away are less than 50% of their ranges. Remember what I said. We want to see bulls overwhelming bears. Now, this kind of moves is telling you that bears are still being given chances in the market. But then the bulls are still in control because they are still taking over the control. Assuming there is no move like this, assuming the move that takes out the supply is not present, this move here, and then you will just expect price to come back to the downside, right? Because this move is a sort of channeled move, it's weak move. It shows that there is no momentum in the market as the price is going forward. If you trade with volume, you are likely to see that volume is reducing. So this kind of moves, it may be a drop based rally, yes, definitely it is, but then this sort of demand is not the type of demand I personally want to see. Especially I want to see the very first candle, because in some instances you have a candle where you have a bearish candle like this, and then you have a candle making a very bullish candle, and then the next candles become small. They become small. This shows lack of momentum going forward, like we saw on the Bitcoin USDT price action chart, where the moves from one all-time highs formed a, what's it called, an ascending wedge, and then we saw price breaking it down. So this is the same thing, but what you want to take notice, from this particular region there was a strong move away, a bullish candle move away before they started losing momentum, but they were still in control. Definitely for us to trade this demand zone, we want price to come down. So this is a good thing for us, that price is not coming back immediately to retest that particular zone. So once you see a sort of channeled move away like this, or weak move away like this, it doesn't show me that serious demand is coming into the market. But then you made another thing and said, if the candle breaks a supply zone, now we have a supply zone here, right? Let's just use this particular one. So we have a supply zone here. It breaks this particular zone, but then it closes right under. If you look at this particular image here, you can see where I have drawn it that it closed right inside of that supply. But this one, it closed right under. Now, like I said, this is a shooting star, right? I'm not sure if I'm getting the name correct, but just take it like it's a pin bar, right? This is a pin bar. And what do you expect when you have a move to the upside, weak move especially, and then a pin bar comes? Move can still continue to the upside, definitely, but then it may continue in a sort of channel form, which will then end up breaking down. So you want a retest of this demand. But for this move to be weak, it means the demand coming into the market at this particular region is not strong enough. It's not strong enough. And for you to not have a strong enough demand means this price can come into it, make a little reaction, and then break it to find demand at a lower place. So for me, this wouldn't be a demand. But as we also know, if a supply gets taken out, that means we have a demand. So for this to be a supply, it means there are a lot of supply there. Now, he wants to consider a strong supply in this instance. This particular image is not showing a strong supply because what we have is a bullish market structure of low making an high, making a higher low. So you definitely expect an higher high. So this in a bullish market structure will not be a strong supply. But in the case that it is a strong supply where you have price doing something like this and your supply is here, then you have this sort of weak movement coming to trigger the supply. That means you have a demand, because the demand coming into this market, despite the fact that the bears are still struggling with the bulls were still able to overpower their region. This is now the worst of the supply, where the supply started. Any leftover supply that is in that region has been overwhelmed by the bulls. But the fact that you see a less than 50% candle range, which is an inverted amount, or what's it called, a shooting star, a pin banner in this instance, means you have an SFP, a failure to close above the highs, or even close above the highest close. So you have an SFP, and what will you expect is an instant return of price to that demand. So the fact that this supply is taken out by this move, originating from this low, means that you have a decent enough demand at this point. The move up while showing bearish pressures, they are trying to resist the bulls, but the bulls are still winning the battle. So you want to trade at this level because of this supply that is taken out. But then if you're not sure enough, you can just wait to see another sort of pin bar at that particular point on that particular time frame, or you go on your lower time frame and wait for break of structure or trend line. And once that breaks, you anticipate a move higher. And in this case, since supply has been taken out, the high has also been taken out, you expect price to come into it and then rally to the upside. So that is that. And then looking at this one, closing right inside of it, even though it's less than 50% of the range, you do not want these sort of things to be happening, because the bulls are telling you they are serious, they mean business. They have taken out supply, yes, and they have closed right inside of supply, not below it. So price may not come back down instantly. You definitely have a demand based on what I explained here, but price may not come down instantly. You want to see the next candle. The next candle might just be another candle that closes right above of supply. So that is the answer to your ECN candle. So now moving on to the last question. Let me try and see that question again. That is where you said NR4. I don't use all these terminologies personally. Where you said, okay, I've explained 2 ECN now, and I've explained 1 ECN taking out supply. This can also be the ECN, right? Taking out supply if it's just one candle. That means you may have this drop, then all this candle, this body can just be one. Just take this body as one, and then this week like this, a week like this, taking out supply. So, but then what you want to watch out for is you do not want an instant retest, instant coming down of price into this zone. You still want price to do something like this, to at least move away a little bit, confirm that that place is broken, and then come back to retest the zone. So that is it about that. Then the last question you ask is that I try to use wide range candle bars, i.e. candle bar larger than previous 4. Okay, I also have a perfect listing for this. I did a lot of these things back in the days, so I have something perfect, and that is where I want to talk about tops and bottoms. I've not released this, so I may be putting it on Twitter today and Instagram. So if you follow me on Twitter, then definitely you get access to this. That is where I talked about trend tops and trend bottoms, and that is the question you have asked, where you have one candle closing above previous 4 bars or 7 bars. I don't go that far. I just take a candle closing above the first candle or the initial previous one, or closing above the previous 2, or closing above the previous 3. Now, if a candle closes, if you have a candle like this, you have a bearish candle, Assuming you have a bearish candle like this, then let me do another one here. You have a bearish candle like this, and then you have a bearish candle like this, and then you have, oh sorry, before that, this should be like 2, and this should be like 3. Okay, good. Then you have a bullish candle coming to close above it like this. Definitely you want it above the whole range of the candle, right? That means, pardon the use of gray on this, changing color is not easy at times. So you have wicks like this, right? You are definitely have weak highs and lows. So do not mind the length, whatever length it is, you just have to make sure that the close is way above it. On this one too, you might have lows, weak lows, and weak highs. So this is the first one. Then this is the second one, where you have something closer like this. And then this is the last one, where you have something closer like this. I'm not sure if you can sadly see this because of the previous drawing, but you just have to manage. So now, this particular one is what I call a minor bottom, because price is dropping. We have this move coming from a drop, right? So this is what I will call a minor bottom, and this is what I will call an intermediate bottom, and this is what I will call a major bottom. I learned it from one of those people making videos, one of the old and the first supply and demand traders. So it's not my concept, so don't take it, man. I didn't make this. I just took it and I studied it and it works. So this is a minor bottom. The inverse is for tops. So this is where you have a bullish candle or engulf closing above the previous candle's range. That means the highs closing above the highs, not just the opening now. Then the intermediate is where you have this candle closing above previous 2, and the major is where you have this candle closing above 3 candle ranges. On a bigger time frame, this particular major top will just be like this particular minor one on a bigger time frame, because these candles will be combined into one. So engulf candles can show you where you have tops and bottoms. So when you consider that you have a minor top or minor bottom here, like you said, NR7 or NR4, but you are going like 4 candles. You want this close to close above 4 candles or 7 candles. That is a lot of work. That is a lot of time to wait. Before you see a candle closing above 7 previous candles, man, you're going to wait a long time. So you won't probably have that every time. But this, what it means by being minor is that move can come back to it instantly, and when you see an instant retest of something like this, it doesn't look good. But for this to have the strength, for bulls to be serious, to conquer 3, now see these red areas, these red bars, all of them, like I've explained in my price action video. I don't know if you guys watch those videos. So you have to watch those previous videos to be able to understand some things. This saves me time coming back to re-explain what I've explained initially. So the time is not easy too. So now take these red bars as grants conquered by the bear army. Take this thing as a field of battle where you have the bear army and the bull army. This is a neutral ground. All these price action lines, price lines, price moving at this point to this point, they are neutral ground. They are not owned by any bull or any bears. But then we see bulls conquering bears, and we see bears conquering bulls. And bulls in this instance means demand conquering supply or overwhelming supply, or supply overwhelming demand, which means bears overwhelming or conquering bulls. You can apply the football technology or football analogy. You can apply a war analogy. Like in most strategies, if you want to pan it well, you have to use a war strategy or a war, how do they call it? War something like that. I'm sure you get what I'm trying to say. So you have to see this like a contest, a competition between 2 teams or 2 armies. All these ground where you see the red bars are grounds conquered by the bears. They belong to the bears. That is why you see them pulling price down, conquering more grounds. It's like in the olden days where you have a city, probably in Nigeria now, a city, they try to fight the other city or the other village to conquer them. And once they conquer them, that village becomes theirs. They install kings there who then in return pay homage to them. So all this price line from this point up to this point before were grants conquered by the bears. So this grant was also a grant conquered by the bears. All this grant was grant conquered by the bears. So now, assuming this is a city, this is a city, this is a city, this is another city, city. That means we have 3 cities in a row belonging to the bears. And the fact that the bulls now are able to take out 3 bear cities in an instant, what do you think is happening? You have 3 villages, 1 to 3, owned by the bears. Then the bulls just come from nowhere. They conquer those 3 cities or 3 villages in one go, piam, like that. What will you say? You will say, no, these bulls, they are very strong. You will say they are very strong. You will believe they have come with a lot of force. And that lot of force is a huge demand coming into the market. Now, for them to clear these 3 cities in a go, it means they mean business. They are serious. And what do you expect them to do next? You expect them to keep conquering more grounds based on the force they have used in taking out these full 3 villages. And all the next bear villages, what do you think they will? What do you think will happen to them? They will be in panic mode for their frontier to be breached in the first instance. And this is their frontier, the last line of defense. For it to be breached in the first instance, and their continuous cities or consecutive cities being cleared out at a go. It shows the bulls mean business. They are serious. They are ready for battle. They are hot. Then all the remaining bear cities will be in panic mode. They will start looking, running, trying to defend this or that. And the bears can conquer them. Or they can then start to pose some resistance. Push the bear armies back down a little. But if they push the bear army, the bull army back a little, what do you expect? The army that has conquered 3 cities at a go, you do not expect them just to give up like that. They will take back control and push price back higher. That is why when you see a candle clearing 3 candles in a row like this, it shows that there is huge demand or huge activity coming from the bulls. But when you look at just a city being conquered at a go, but then the other city wasn't conquered like this, something like this. Let me quickly clear this, blah 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 like that. So when you see this city like this now, like this city has been taken out by the bulls, right? But then this city was just eating to some extent. So either this at this particular point, either they start pushing back the bulls, or the bulls continue to eat them on another day. It's what we will wait to see, because this is a minor bottom line in this instance. So once you see this, you are at alert. You want to see what will happen next on the next day if the bulls army will continue to devour this city and the next. So that is why you wait for another candle to see how it reacts before coming back in the instance of this. Because if it comes back right instantly like this, there is possibility that the bears have lost guard. They lost guard at this point, but then they are back now. It's possible, and then what will you see? You will see price going back down. We have bullish engulf leading to a bearish engulf. It does happen. So that is the analogy he wants to see behind this. But then when you have 3 cities like this and you are able to conquer 2 at a go, it still shows a lot of bull pressure, a lot of strength in the army of the bulls. So probably they're not able to conquer this 3rd city completely due to time. At times you have to look at time too. Probably they're not able to conquer this 3rd city due to time. So you also expect them in the another run to devour the city with ease. And devouring the city doesn't mean by necessarily by close. It can be by highs. Maybe they make a higher high to this now, but then the low is not quite a deep low. But then you also see them making a higher high, higher low, which is a bullish market structure. So once you have this, definitely you want some resistance from the bulls. They won't just be killing them like that. They will have to put some resistance too, where those people will come back a little, try to regather themselves and strategize and eat again. So that is where you have a bullish market structure. And once this happens, you expect price to at the end of the day come back into the demand where the army of the bulls rose. That is where the dead may never die again. Then they start going back up. That is the analogy you want to see in all these things. You want to put all these things you do in real life, all these things you watch in movies, you want to put the analogy into your chart. That is how you can easily understand what is going on the chart. And that is when the real lesson will start. But when you start saying ERC can do, ECA can do, RN7 can do, they are confusing. They miss I can't even follow up. Just like I can't even tell if one is an armor or shooting star. It's not that I don't know it, but then that is not important. Knowing those things is not important, but knowing the story behind what is happening is the most important. So here I have my intermediate high, like you can see here, a candle taking out two previous candles, and here intermediate low. I didn't put minor here because minor is not what I want to see. Then here we have major high, major low. And this is the type of retest where you have an instant retest, V retest into the shape, which is not that good. And this one, in some cases, may be good. But then you want to see an higher high, higher low. I've made these drawings years back. So I have also grown from when I did these drawings. So some things I do not accept back then, I have found a way to refine them and make them acceptable to me now. But this serves as a very quality guide to you. So when you look at this, you see I have a perfect chance. And any questions you have, you should always ask. And this second one is an example of where you have the bulls still keep conquering grounds, not giving BS any chance. And here is a channel return. And this channel return means that the bulls are weak. And what is it for me? It's for me a bull flag or a descending channel. And what always ends descending channel or bull flag is a breakup to the upside. Now this, with some refinement, will become a good zone to me. But at that point, when I built this chart, it wasn't a good zone to me. So I hope you understand all this. I think I have uploaded this, or maybe I will talk about break of market structure, break of trend line, pivot high, and all those later in the next class. So I don't want this to take a lot of time. It has taken a lot of time already. So, but then I'll be able to explain the strong move and identifying strong moves. So now I believe I should be done with strong moves away. So the next thing I will talk about in supply and demand, before I talk about entry, or either I talk about entry and exit with supply and demand, level to level, or I talk about the break of trend lines, where you have a trend being broken like this, and whatever candle is breaking that as your demand, or a break of structural high, like you have a structural high. Okay, you have a mini structure like this. This becomes a mini validation. It was taken at SFP, but then rallied. You have a break of structure here, then supply. So all those break of structural highs, swing highs, local highs, then what's it called again? Fractals are almost the same thing as pivot highs. Then trend line, break of trends, break of structural highs and lows. Then either that I talk about that, or I talk about entry and exit with supply and demand, or I talk about supply and demand level to level trading. Anyone that comes first. But then I hope with this lesson you'll be able to understand identifying strong moves away in order to filter out your strong zones. And do not forget, the lower the base, the minimal the basic candles, the better. It doesn't mean that a lot of candles making a base cannot constitute a strong zone. Of course, if you go higher, something that looks like this on a 4-hour chart may look like this on a daily chart, and on a daily this will constitute a good zone. On 4-hour, this will not constitute a good zone, but then it's still the same point, right? So you always want to pay attention to that. And do not misunderstand me. I trade supply and demand. I do not trade drop, base, drop. I do not trade rally, based drop. I do not trade what's it called, drop based rally or rally based rally, because some people believe that if you have a drop based drop, definitely every basin here is a supply and every basin here is a demand. That is what some people believe, but then do not get it twisted. These are just possible areas where you look for demand. They do not constitute demand and supply. They mean that those are the areas where you are likely to see demand or supply coming into the market. So taking all this rally base as demand and supply may be a way to keep losing more money rather than looking at what is happening in the market. I have also explained the different types of engulfing candle with the use of that intermediate and minor and major tops and bottoms. And the thing I have not been able to explain now is inside bar. Because when you look at your basing candle, like this one, you have a drop, here you have a base, here you have a rally. You want to see either you have an engulfing candle at the base or you have an inside bar. Hopefully, before I go into detail on the next class, I'll be able to talk about inside bars. So let that be it for now. And do not forget to subscribe. I don't force subscribers, but if you want to subscribe, you subscribe. If you want to like, you like. But I suggest that you like so that I know that this lesson is reaching people well and they are quite understanding what I'm trying to say. So if you do not like it, or if you do not understand some things, or if you do not like the method of analogy, then you can dislike it so I know how to change and improve in the future. So that's it, guys, and thank you for watching.